Hi everybody, I'm Steve McDonald. This is your 2-minute retirement solution. It never ceases to amaze me how many retirement-related articles the financial press can pump out on a daily basis about how to make your retirement better, how to retire early, 2 funds that are going to solve all your problems, 10 ways to have a risk-free environment. The list is endless. And except in rare cases, all of them talk about saving more, spending less, downsizing, having a plan, and diversifying. You know the gig, I'm sure. They're all the same. But never, and I mean never, except once a year when the Dalbar report comes out, is there even a mention of the 2 behaviors, herding and risk aversion, that are responsible for virtually all the losses small investors incur. And this year's report from Dalbar can be summed up this way. Yes, we still stink at investing. And the reason we stink: risk aversion, fear of losing money, and herding, following the crowd. They have 30 years of research that proves these 2 are death traps for investors, and to date, they seem to be impossible to overcome. Year after year after year, we watch the little guy wait until the top of the market to buy. He does this because he sees increasing stock prices as an indication of market safety. That's risk aversion. But 8 years of increasing stock prices are not a buy signal. Next, he watches all the other uninformed little guys rushing into the market for the same reason and thinks that too is a buy signal. That's herding. When the next sell-off hits, which it will, Dalbar tells us this guy will engage in the next phase of risk aversion and hold his overpriced stocks all the way down. Then and only then will he sell, and as the research tells us, always at the bottom and always at a loss. He has the whole thing backwards. The simple fact is sell-offs are a fact of life, and if you're going to invest, you must plan and prepare for them. As a retired investor, the way to prepare to them is to own stocks and bonds that you can hold through these predictable dips and valleys in the markets. Selling into these dips is insane. Own only high-quality companies that will be there, that will pay their interest and principal or dividends if they're stocks, dividend-paying stocks, no matter what the market does. Companies that will bounce back when the turnaround happens, which it always does, and will go back to new highs, which always happens too. What I call ironclad holdings. The 8-year run-up in prices and the new highs on the indexes have finally convinced the little guy, once again, it is okay to invest in stocks. And it is now, when the market is soaring, that he also thinks a little more risk is okay. For us over 60 types, that is never okay. It isn't that there aren't opportunities in the market. There are. But only if you stick with my ironclad thinking and are able to ride out the next storm, not cut and run at the bottom. Prepare yourself now for when the blood runs in the streets again, and it will. And maybe, just maybe, you can be a part of the few who will watch but not participate in the losses. That's it. That's your 2-minute for this week. For everybody here, I'm Steve McDonald. Thank you for being a part of it. Think ironclad.